What they want you to do is when it hits the fan, they want you to pick up the phone and call them and let them know. Well, to all of those people that were asking me that question back then, what I want to say is, hello, the excrement is currently impacting the rotary air acceleration device. Protect yourself now before it is too late. First, everybody knows about the disaster in the stock market over the past couple of days, but they're already calling this Black Monday. Futures plummet as VIX hits 62. I'll explain VIX in a moment. Japan suffers worst point drop in history. Now, I've often said that all economies are interconnected. Read my last book, Great Gold and Silver Rush of the 21st Century, and you'll see how everything is now very connected. So, Japanic Monday. We've had Black Monday, now we've got Japanic Monday. Japanese bonds and stocks halted after plunging into a bear market as everything crashes everywhere. And so this is the Nikkei and the big plunge that it took over the past couple of days. Now you got to remember, Japan is a day ahead of us. And so what you're seeing happen here already happened there. And so this is global. And, we know that it's global. Here they're calling it the Monday Massacre, and they're saying that it's being brought on by the Japanese yen carry trade. China is facing an epic deflationary crash that it can no longer hide. Now, this is from back in May. We have had warning signs. I showed them to you. China is facing an epic deflationary crash that it can no longer hide. Now, this article I've been saving since May because to show you that all of this is interconnected. What's happening now in China is people are slowly rushing from other investments into precious metals. Beijing helicopter taking off. China central bankers call for direct currency transfers to households. So this is Milton Friedman's famous helicopter money, he called it. It's currency. And this is from just this last Saturday. Just another manic Monday. Goldman traders issue sell-off checklist. Don't buy this dip. JP Morgan Trading Desk says it's not wise to fight the inertia. Consider tilting net short. Nomura exposes the ugly truth and warns dip buyers. The VIVIX never lies. The VIVIX is an update on the VIX, the VIX, which is called the Volatility Index. We aren't done yet. So they're saying it isn't over until it's over. No. So what is the VIX? The Volatility Index, the VIX, is a real-time index that represents the market's expectations for the relative strength of near-term price changes of the S&P 500 index. Because it is derived from the prices of SPX, that's the S&P 500 index options, with near-term expiration dates, so these are bets on what's going to happen in the future, it generates a 30-day forward projection of volatility. So the VIX is letting us know what traders think is going to happen over the next month. Well, here's what traders think. The CBOE Volatility Index, second worst day in the Volatility Index since 1990. Strap in. So this is the VIX going back to 1990. And what you have here, I want to dig into this a little bit deeper. This is sort of exciting. But look at the steepness of this. It's actually steeper than the COVID crash and the 2008 global financial crisis. But look at this. This is the long-term capital management meltdown, which led to the Asian contagion and the Russian bond default. This is 9/11. That is 9/11. This is the Gulf War, I believe. Then you've got the global financial crisis. Global. This was a worldwide financial meltdown, and we're almost at those levels already. And this is just Monday. This, I believe, was Greece. This was the Cyprus. These were the Greece bank bailouts. This is the Cyprus bank bail-ins, where they took depositors' funds to make the banks whole. I don't know what this is. I don't remember what that is. This is the pandemic plunge or the COVID crash. This is the lockdown of most of the world's economies. Locked down, nobody able to move. We've just exceeded, shutting down the world economy. And so this is absolutely enormous. The volatility index rises to 65, a level only seen during the 2020 pandemic and the 2008 financial crisis. Well, actually, that last chart showed it beyond the pandemic plunge. The greatest bubble nearing its peak, says Black Swan Manager. Now, this is from July. So the warning signs have been out there. If you didn't get ready, there's still a little bit of time. But I don't think that the time to get ready for this is going to last that long. I've been predicting that something is probably going to happen before the elections. This does happen. I'll show you this in another video. But very often in an election cycle, the chaos starts well before the election. And then there's an enormous crash and big deficit spending happens. And then it's turned over to a new president, and even bigger deficit spending happens. And so the 5 largest companies as a share of the S&P 500 total market cap, these are huge percentages. This was July. The warning signs were out there. Buffett calls the top. Berkshire quietly dumps half of its Apple shares amid unprecedented selling spree. And this is Berkshire Hathaway's cash position, and look at what just happened. Now, it isn't just Apple, but they sold half of their Apple already. Warren Buffett is getting ready for a bumpy ride. I urge everybody to read this article by Alistair McLeod. I love Alistair. He's great. But this is a great article, and a lot of it has to do between this diversion. Here he's taken bonds and the S&P 500, and then he inverted the bonds, which I've done many, many times. I've shown this chart to people many, many, many times over, but he's inverted them, and this divergence suggests that there's got to be an enormous correction coming, and it isn't over yet. And so read this, and then the background is that equities are wildly overvalued relative to bond yields. More than any time in financial history. While equities tank, gold and silver's ascendancies will only be just starting. So there could be a further little pullback in gold and silver, but then it's going to take off like a rocket. The stock market's recession playbook is in full effect. The recession, I believe it began a while ago. But if it didn't begin a while ago, like I think, the recession has begun. Secret bank ratings show U.S. regulators' concern on handling risk. And so the regulators are concerned about banks failing. Bank failures are almost certain to follow. The commercial real estate crisis has gone nowhere. I hate all of these acronyms that everybody has to use all of the time. I like to define them. At least they did it here. But there are a lot of articles that I see where they don't define what an acronym is. And once you speak over people's heads, you've lost them. You can't hit sell if you can't access your brokerage account. What are they talking about? Retail traders are furious as outages hit major U.S. brokerages amid Black Monday chaos. Hello! The excrement is impacting the rotary air acceleration device. Buckle up. This is Charles Schwab, and I have a brokerage. That's my brokerage account. And look at what has happened to their stock recently. And then look at their exposure, their portfolio losses. So the banking sector, banking and brokerage sector are very unstable right now. Breaking. Wharton's professor, it's Jeremy Siegel, he's a professor of economics, calls for a 1.5% rate cut by the Fed, and that's in an emergency meeting. He means now. Another 0.75 cut in September. So he's talking 1.5 percentage points. And these are back to back, 0.75 and then 0.75 within a month of each other. But he thinks that this needs to be an emergency meeting now. Back when I first started making public appearances, I was traveling with Robert Kiyosaki, speaking to these enormous audiences. And afterwards, people would just surround me and they would all ask me one question: when is it going to happen? And, I would say, I'm not sure, but I know we're tied to the railroad tracks and there is a train coming, that it is inevitable. And they would look very disappointed in my answer. And after a couple of years, my business partner said to me, Mike, you know what they're really saying when they ask you that question, don't you? And I said, no, what is it? And he goes, what they're saying is that they really don't want to invest in gold and silver right now. They really don't want to protect themselves. The stock market is going up, so they want to stay invested elsewhere. What they want you to do is when it hits the fan, they want you to pick up the phone and call them and let them know. Well, to all of those people that were asking me that question back then, what I want to say is, hello, the excrement is currently impacting the rotary air acceleration device. Protect yourself now before it is too late. But what's happening with the S&P 500? Well, take a look at what has happened in just the past couple of trading days. Then, if you look at 5 years here, what you see is that there's almost no real support. You may see a little bounce down in here where we're going, above 5,000. But you don't have any real support until you get in, there's support here above 4,500 and some here. But I'm expecting, read Alistair McLeod's article that I showed you earlier. With gold, what's happening? Almost nothing. Little tiny drop, but it's down 1.63% for the day. And so gold is holding its own and showing that resilience as a safe haven asset. Now, I am expecting that as some of these traders, as the market crashes, in 2008, what happened was gold and silver went along for the ride, and they turned around very rapidly. They went along for the ride for about a month, and then they turned around. The stock market kept on crashing for another 4 months, at 4 or 5. And then real estate kept on crashing for another year or two. So gold and silver turned around and they took off like a rocket. It was something spectacular to witness and something very rewarding to be a part of. But there could be a further plunge in gold. But look at all the support above 2,300. Tons of support. And then you've got tons of support above 2,000. So even if gold falls down to the 2,000 region from the 2,400 level, it's going to be doing that while the stocks are plunging incredibly. And a whole lot of other assets will be plunging. And if gold plunges, it's going to be a little. This is why why crypto traders need gold in their portfolio. They need some. It's a stability thing. And then silver is basically gold on steroids. Silver fell today, and that just makes it a bargain. I'll show you the gold-silver ratio in just a moment. But it fell today, but you don't have to worry about it because gold drags silver all over the place with it. This just means buying opportunity, and I expect silver to outperform gold by multiples, not by a small percentage point, but by multiples. And so when you see silver plunging like this, just keep on watching. This is a buying opportunity. Buy a little more, buy a little more. That's what I do, and that's what I've been doing. And here's the reason. Right now, the gold-silver ratio is at 88. This may go higher. And when it does, it's just another buying opportunity, because when things turn around big time for the precious metals, just like back in 2008. Back in 2008, let's go back to that silver chart for just a second, and let me put max in here. So the market started to crash, and gold and silver went along for the ride, and down here, the low, these are monthly prices, a low of $8.46. I was able to, my average, I practically doubled my position in silver. This is silver spot back then, and my average buy-in was $11 an ounce. I really went heavy into it. Then there was the pandemic plunge, and I picked up a bunch way down in the 11s, 12s, and so this is just, when you see 88, that's a buying opportunity. So, there's all these people that will say, you shouldn't put more than 10% of your portfolio into gold because it's too risky. So let's go back to the beginning of the century and back to where the gold bull market started here. We're in late 1999. This is the relative performance of gold for this century compared to the S&P 500. And what you see here, the S&P just broke, I don't have the percentage here. I can't get my cursor to do today. And so it's up 296% as of 7/25. I don't know why it's not giving me the August 5th numbers here, but it's up less than 300% right now. Gold is up here at 850%. 850% gains this century compared to less than 300. So Woz says, have you ever asked yourself how bad it really is? It's Intel CEO quoting the Bible levels of bad. And I just want to say, hello, the excrement is impacting the rotary air acceleration device right now. You have to strap in and get prepared. Now, I don't know what series this is from. This is supposed to say winter is coming. They've put Jerome Powell's face in here. Printer is coming. If they don't start heading this off right now, what you are going to see is interest rates are going to suddenly be dropped to zero again, and they are going to create trillions upon trillions of dollars, and it's going to make the printing that has happened since Ben Bernanke in 2008. Bernankenomics is going to be replaced with Powellonomics. So get ready, buckle up, and man the lifeboats.